Hey everyone, welcome back. We're doing a deep dive today into trading wisdom,
Okay.
but with a bit of a twist.
Okay.
We're going to be drawing from Unknown Market Wizards,
Interesting.
which is a book filled with interviews with successful but kind of under-the-radar traders.
Yeah, that's a good one. What I think is so interesting about that book is it really gives you a glimpse into how people are consistently beating the market.
Right,
But they're not, the big names that you always hear about.
right.
They're people from all walks of life, and they're doing it in very different ways.
Uh-huh.
But I think what's interesting is that despite that, they kind of converge on some common threads.
Yeah, and our mission today is to kind of pull out those threads
Yeah.
and see what wisdom we can glean.
Yeah, and I think what makes this deep dive really special is that these aren't just theories. I mean, we're looking at real-world stories and actionable advice from people who have actually done it.
Yeah, for sure. So one of the things that just jumped out at me when reading through this book is that pretty much every single one of these unknown market wizards
Yeah.
really stresses risk management as like the critical factor.
It's so important.
Yeah.
Yeah. And I think it makes sense because, you could have the most brilliant system in the world for picking trades, but if you don't manage your risk properly, one bad loss can wipe you out.
Right. Yeah, it's kind of like the foundation.
It is the foundation.
It has to be there.
Yeah.
There's a great story in here about Peter Brandt,
Yeah.
one of the traders who's profiled,
Yeah.
and it kind of illustrates this point perfectly.
Okay.
So he analyzed his trades, and he realized something pretty interesting.
Okay.
The vast majority of his profits
Uh-huh.
came from just like a small percentage of his winning trades.
Right. Classic Pareto principle.
Right.
80-20 rule in action.
Yeah, exactly.
Right.
80% of your results come from 20% of your efforts in trading. Often that means 80% of your profits
Right.
are going to come from just 20% of your trades.
Yeah.
So what did he do
Yeah.
with this insight?
Yeah.
Well, instead of trying to increase the number of winning trades, he actually decided to focus on minimizing losses on his other trades.
Right.
So he intentionally tightened his risk management even further.
And that's, I think, a key takeaway is that it's about letting those big winners really shine by controlling the impact of the inevitable losing trades.
Right.
Good risk management is what keeps you in the game long enough to actually have those big wins happen.
Yeah. So the question for anyone listening is,
Yeah.
how much are you risking on each trade?
Yeah.
Do you even have a plan for when things go wrong? Because, it's so easy to get caught up in the potential for a win, but it's really critical to have a solid plan to protect yourself.
Absolutely. And that leads us to, I think, another really fascinating point that a lot of these traders talk about is this idea of narratives in the market.
Right. The story we tell ourselves
Yeah.
about what's happening,
Yeah.
which can be both helpful
Yeah.
and dangerous.
Absolutely.
Right.
I mean, I think narratives are so powerful because they help us kind of identify trends and make sense of complex information.
Yeah, make sense of the world.
Exactly.
Yeah.
But the danger of narratives is that we can become so attached to a particular narrative that we start ignoring evidence to the contrary.
Right.
You know?
We only see what we want to see.
Exactly.
Yeah.
And the book actually shares a really interesting cautionary tale about another trader, Jason Shapiro, who learned this lesson the hard way.
Uh-oh.
So he was so convinced that the market was going to continue falling
Uh-huh.
in 2003 because of the impending war in Iraq.
Right.
And he was so sure of this narrative
Uh-huh.
that he completely ignored some pretty clear signs that the market was actually turning around.
Ouch.
And you know what happened.
Yeah, you got crushed.
He lost a lot of money.
Right, yeah. So how do we avoid falling into that narrative trap?
I think it comes down to constantly questioning your assumptions.
Okay.
So, ask yourself, is the market actually confirming my narrative? Or am I clinging to a story that's no longer true?
Right.
You have to be flexible.
Uh-huh.
You have to adapt to new information.
Yeah, you got to be willing to change your mind.
Exactly.
Right.
And you have to be willing to change your mind quickly.
Yeah.
Because things can change really fast in the markets.
Yeah, like that saying, don't fall in love with your ideas.
Exactly.
Be open the possibility that you could be wrong.
Right.
Now, let's talk about another trader in the book, Jeffrey Newman. This guy made a fortune primarily trading penny stocks.
That's interesting.
Yeah. Which, is an area that a lot of people associate with.
Scams.
Yeah.
High risk.
Super high risk.
Yeah.
So it seems kind of counterintuitive
Right.
to everything we've been talking about with risk management.
Actually, risk management. Yeah.
Right. So how does this guy do this?
Yeah, so I think Neumann's secret weapon is being early.
Being
So he was early to exploit decimalization.
decimalization.
Yeah, so that's when they moved from trading stocks in fractions of a dollar
Right.
to decimals.
Right. Okay. Yeah.
So they started trading in pennies.
Uh-huh.
And so what this did was it really narrowed the spreads between the bid and ask prices. So he was essentially able to scalp profits
Okay. So
from those tighter spreads.
it was like this new little,
Is a new opportunity.
yeah, new opportunity that not everyone saw.
Exactly.
And he was early to the game.
He was.
Yeah.
And so this theme of being early really continues throughout his career.
Uh-huh.
So he was also early to spot some really interesting emerging trends like 3D printing.
Right.
And I think a really good example of what this looks like in the context of an actual trade is he was often one of the first to enter trades right at the point of trendline breakouts.
Oh, right when it's just starting to break out.
Exactly.
Okay. But isn't that,
Risky.
yeah, I mean, you could end up with a lot of false starts.
Absolutely. And that's where risk management comes back in.
Okay.
So if a breakout doesn't behave as expected, he exits the trade immediately,
Okay.
minimizes his losses.
Well, so
Very disciplined.
it's almost like he's saying, I'm willing to be wrong,
Yeah,
but I'm not going to stay wrong for long.
exactly.
Yeah.
And this approach might not be for everyone,
Uh-huh.
but the underlying principle, I think, is universal. You know, minimize losses when you're wrong and maximize gains when you're right.
Right. Cut your losses short.
Exactly.
Let your winners run. So it seems like, finding your edge, getting in early,
Uh-huh.
and having that rock-solid risk management
Yeah,
are key.
absolutely.
Okay. What else do these unknown market wizards have in common?
Well, they also stress the importance of recognizing and exploiting what they called information imbalances in the market.
Information imbalances.
Yeah.
I like the sound of that.
Yeah, it's a really fascinating approach. And it's essentially about looking for significant pieces of information that the market hasn't fully processed or priced in yet.
So you're trading on that gap.
Exactly. You're exploiting that edge.
Okay.
And then you're getting out as soon as that information becomes public knowledge.
Okay, so what are some examples of what these information imbalances might look like?
Absolutely. So there's actually one unnamed trader in the book who uses social media data to gauge consumer behavior and actually predict market moves.
Wow.
And one example of this is he was able to anticipate the impact of the E. coli scare at Chipotle
Uh-huh.
by noticing a sharp drop in social media conversations about going to the restaurant.
Oh, wow. So he's basically using social media as like a real-time gauge of consumer sentiment
Exactly.
before the market reacts.
Exactly.
That's wild.
And he also used this method to predict the negative impact of that documentary Blackfish on SeaWorld stock price.
Wow. That's pretty next level thinking.
Yeah.
But I imagine this approach requires a pretty specific skill set.
Yeah. It does. I mean, you need to be really meticulous in your research,
Uh-huh.
extremely disciplined,
Right.
and willing to exit trades even when they're profitable.
Oh, so maybe not for the faint of heart.
No.
It's like being a detective,
Yeah,
piecing together clues.
absolutely.
Yeah.
And speaking of adapting and evolving your approach, there's another guy in the book, Marston Parker.
Okay.
And he's really interesting. He went from using fundamental analysis to systematic trading,
Uh-huh.
and he was constantly tweaking and refining his approach over 22 years.
Wow, 22 years. That's a career.
Yeah, to stay profitable.
So I'm sensing a theme here.
Yes.
What's the key takeaway?
The key takeaway is that markets change,
Right.
and traders have to adapt.
Uh-huh.
What worked yesterday might not work today.
Right.
So you have to be willing to evolve.
And sometimes you might even need to just completely overhaul your entire approach.
Yeah. And in fact, the book also talks about the dangers of over-optimizing trading systems.
Over-optimizing.
Yeah.
So what is that?
That's when you kind of tweak your system to perfectly fit past market data.
Uh-huh.
So it might look amazing in backtesting,
Right.
but when you actually apply it to live trading,
Yeah.
it often fails miserably.
Right. So you're basically creating a system that's really good at predicting the past, but not so good at predicting the future.
Exactly.
Right.
It's kind of like training for a marathon by only running on a treadmill.
Oh, yeah.
You know, you might think you're really fit, but then when you actually get out on the road,
Right. You're not prepared.
you're not prepared
Yeah, for the real world.
for the real world.
Okay.
So sometimes you actually need like substantive changes to your trading approach,
Right. Not just tweaking.
not just tweaking.
Yeah, okay.
And that leads us to another really crucial point that came up repeatedly,
Yeah.
and that is discipline.
Discipline.
Yeah.
Oh, yeah.
Even when things are going really well.
Yeah. I can imagine that would be tough.
It is.
Yeah.
Yeah. And there's this great story in the book from another trader, Salish,
You
and he was sharing a story about how he almost made a really big mistake after a string of wins.
Oh, no.
And he was getting overconfident.
Uh-huh.
And so he placed this large, risky trade
Okay.
that was completely out of character for him.
Right.
But luckily, he had a risk manager who stepped in and prevented him from making this potentially disastrous loss.
So even when you're feeling good,
Yeah.
you got to stick to the plan.
Exactly. And it's so easy to get caught up in the excitement and, start making impulsive decisions
Right.
when you're on a winning streak.
Right.
So yeah, discipline is key.
Discipline is key, even when you're winning.
Exactly.
Now, what about when you're losing?
That's a good question.
What do you do when you're in a drawdown?
Yeah. Well, discipline is actually even more important when you're losing.
Okay.
I mean, it's so easy to get discouraged
Uh-huh.
and make impulsive decisions, but that's often when I think the best opportunities arise.
Right.
Like be greedy when others are fearful.
Exactly.
Yeah.
Yeah. So it's about having the mental fortitude to stay the course.
Right.
Stick to your strategy.
Right.
And wait for those moments when the market swings back in your favor.
Yeah. It's like the Warren Buffett quote, be fearful when others are greedy and greedy when others are fearful.
Yeah, exactly.
Right. So patience and discipline.
Yeah.
The key.
Absolutely.
Okay. Now let's switch gears a bit
Okay.
and talk about another interesting concept from the book.
All right.
Event trading.
Oh, that's a fun one.
Yeah. What is event trading?
So event trading is basically a strategy where you're trying to capitalize on specific market-moving events.
Okay.
So that could be, a big economic announcement, an unexpected geopolitical development, or even a surprise earnings release.
Right. So you're trying to anticipate
Yes.
how these events are going to impact the market.
Yeah, and position yourself accordingly.
Okay. Do you have any examples? Yeah, absolutely. Jason Shapiro, who we talked about earlier, is actually a master at this.
Okay.
He really meticulously analyzes the potential market reaction to events, and then he acts decisively.
Okay, can you give me like a real-world example of how this would work?
Yeah. So remember when Trump was on his way to a G7 meeting
Uh-huh.
and he tweeted about imposing tariffs on China?
Oh, yeah, that was a big one.
Yeah, that was completely unplanned.
Right.
Potentially huge market implications.
Uh-huh.
Shapiro was actually listening to a live news feed.
Okay.
And as soon as he heard about the tweets, he shorted the S&P 500.
And it went down.
Yeah, and he made a killing.
Wow.
But as you can imagine, this approach requires lightning-fast reflexes,
Uh-huh.
nerves of steel,
And a lot of knowledge.
and a lot of knowledge.
Yeah.
Okay.
So what kind of skills
Yeah.
and temperament do you need to be good at this event trading?
I mean, you need to have a really deep understanding of market psychology. The ability to kind of filter out the noise and focus on the truly significant events.
Uh-huh.
And you need the courage to act decisively under pressure.
So not for the casual investor.
Probably not. It's a very specialized approach.
Right.
But I think what it highlights for all of us is the importance of staying informed
Uh-huh.
and being able to react quickly
Right.
to changing market conditions.
Yeah, because things can change so fast.
Yeah,
Okay, so adaptability is key.
absolutely.
Now, what about for those traders who are kind of in it for the long game?
Yeah,
They want to hold positions
yeah,
for months,
yeah.
years.
Yeah, there were definitely some traders in the book who focused on longer-term trading.
Okay.
In fact, Jason Shapiro, who we've been talking about,
Okay.
actually made a significant portion of his profits from longer-term trades
Okay.
that were based on his analysis of macro trends and market narratives.
Oh, so the narratives come back again.
They do.
So he's not just reacting to the news. He's also thinking about the big picture.
He is.
The underlying forces
Yeah.
that are driving the market over the long term.
Yeah. He really believes that every market has like a dominant narrative,
Uh-huh.
like a story that's influencing price movement.
Oh, wow.
And understanding that narrative
Yeah.
is key to identifying those long-term opportunities.
So I'm starting to see how all these pieces fit together.
Yeah.
It's a holistic approach.
It is.
It's not just about technicals or fundamentals.
Yeah.
It's about understanding narratives,
Uh-huh.
event trading, risk management.
Yeah.
It's like you got to consider all these factors to really get a complete picture of the market.
I think you hit the nail on the head there. It's about understanding that everything is interconnected.
Right.
And you can't just look at things in isolation.
Yeah, but it's also about recognizing that there's no one right way to trade.
Right. Right.
What works for one person might not work for another.
Yeah. It's about finding your own style.
right? Your own edge,
Yeah.
you know. Speaking of which, there was a story about a trader who completely shifted his trading style after experiencing some major setbacks.
Oh, yeah, that was Marston Parker,
Right.
the systematic trader we talked about earlier.
Uh-huh.
And I think his story is such a great example of how sometimes you really need to be willing to just abandon what you're doing and start fresh.
Oh, wow.
I mean, he went through several major overhauls of his trading system over his 22-year career.
Wow. That takes courage.
Yeah, it does.
What triggered those shifts?
I think one big thing for him was that he recognized that markets change.
Right.
And what worked in the past might not work now.
Mm-hmm.
He was also very aware of the dangers of over-optimization,
Right.
which we were talking about earlier.
Okay.
So he was constantly adapting, learning, and evolving.
Right. And not afraid to make really big changes.
Absolutely not.
Yeah. So it's like that quote, the definition of insanity is doing the same thing
Yeah,
over and over again and expecting different results.
exactly.
Yeah. So sometimes you got to blow it all up and start over.
Yeah. Now let's talk about something that's really crucial, but I think often overlooked.
Okay.
And that's the psychological side of trading.
Right. The mental game.
Mental game.
Yeah.
And a lot of these unknown market wizards really emphasize the importance of managing your emotions.
Right. Because trading can be such a roller coaster,
Yeah.
financially and emotionally.
Yeah, it's easy to get caught up in those highs and lows.
Yeah.
And Jason Shapiro is actually a great example of this.
Okay.
He talked about the importance of being really aware of your emotional state
Okay.
and how it can affect your trading decisions.
Okay.
And he actually had a rule that if he was feeling either too euphoric
Okay.
or too depressed,
Right.
he wouldn't trade
Wow.
because he recognized that his emotional state could really cloud his judgment.
Right.
And trading when you're not in the right mindset
Uh-huh.
can be absolutely disastrous.
So self-awareness
Yeah,
is key.
it's huge.
Yeah. Know yourself, your strengths, your weaknesses, and when to step away.
Absolutely.
Now, how do you deal with the emotional fallout
Oh, that's a good question.
when you make a bad trade?
Yeah, because it happens to all of us.
Yeah.
Yeah, and Peter Brand, I think, gives some really good advice on this.
Okay.
He talks about the importance of forgiveness.
Forgiveness.
Yeah, forgiveness of yourself
Okay.
for making mistakes, because we all make mistakes.
Right.
And it's how we learn and grow.
So don't beat yourself up.
No.
Learn from it and move on.
Exactly. Holding on to that guilt and regret
Yeah.
will just sabotage your future performance.
Yeah.
It's like carrying this heavy weight around.
Yeah.
That prevents you from moving forward.
Yeah. You just got to let it go.
Let it go. Focus on the present moment.
That's good advice for life in general.
Yeah, I think so too. And then I think another psychological trait that's really essential for traders
Yeah.
is patience.
Patience. I can see how that would be important.
Yeah, it's so important. I mean, so many of these traders talked about the importance of just waiting for the right opportunities
Uh-huh.
rather than chasing every little move.
Right.
It's not about constantly being in the market.
Yeah.
It's about picking your spots very carefully.
Like a hunter.
Like a hunter, exactly. Waiting for that perfect shot.
Right. And one of the traders, Sailesh Sal, talked about the importance of being comfortable with doing nothing for extended periods of time.
Right.
He called it being in a state of readiness.
I love that.
Yeah, like a sniper just waiting
Yep.
for the right target.
Exactly.
Yeah. So it's not just about waiting.
No.
It's about being mentally
Yes.
and emotionally prepared
Yes.
to act
Yes.
when the right moment comes.
Absolutely.
Also, it's about discipline, focus,
Yeah.
controlling your impulses.
Exactly. And patience also applies to holding on to winning trades.
Oh, okay.
Yeah. Don't get shaken out too early. Let those winners run.
It's that old saying, cut your losses short
Yep.
and let your winners run.
Exactly.
Easier said than done, of course.
Right.
But you got to have a plan
Yes.
and stick to it.
Absolutely. Now let's talk about something that I think is really interesting.
Okay.
The concept of identifying and exploiting market inefficiencies.
Ooh, market inefficiencies.
Yeah.
What are those?
So it's basically about finding those situations where prices don't actually reflect the true value of an asset.
Okay, so.
And all of these unknown market wizards had different ways of doing this.
Okay, I'm all ears.
So Jeffrey Newman, who we talked about earlier,
Right,
his strategy of being early on emerging trends
right.
is essentially about exploiting inefficiencies
Okay,
before the rest of the market catches on.
okay.
He's finding those little pockets of opportunity
Right.
where the information hasn't fully disseminated yet.
Right, it's like he's seeing a wave forming.
Yeah.
before it crashes on the shore. And he gets in early.
He does,
Why?
and then you have the trader who focuses on these information imbalances.
Right.
Right. He's digging deep to uncover those little hidden gems
Right?
of information
Yeah.
that haven't been fully priced in.
So it's like they're both playing a game of information arbitrage.
It is.
They're trying to stay one step ahead
Yeah,
of the market.
exactly. And that's, I think, what makes this book so compelling. There isn't one right way to trade.
Right.
It's about finding what works for you,
Uh-huh.
what resonates with your personality and your strengths.
Okay, so find your edge and exploit it.
Absolutely.
But what about for people who are just getting started?
Yeah.
You know, what advice do these wizards have for novice traders?
Well, there's a lot of emphasis on learning from your mistakes.
Okay.
Marston Parker,
Yeah.
he actually mentioned that he blew up several accounts early in his career.
Oh,
Yeah,
painful.
painful, but he said each of those failures actually taught him invaluable lessons that ultimately led to his success.
So it's okay to make mistakes.
Yeah, as long as you learn from them
Yeah.
and don't repeat them.
So embrace the learning process,
Yes.
even when it's tough.
Yes.
What other advice do they have for beginners?
Another really common piece of advice is start small.
Okay.
Don't risk more than you can afford to lose,
Right. Especially when you're just getting started.
especially when you're starting out.
It's like learning to swim in the shallow end of the pool
Exactly.
right before you jump into the deep end.
Yep.
What else?
A lot of the traders also said finding a mentor is really helpful.
A mentor.
Yeah, someone who's been there, done that,
Right.
who can provide guidance and support.
Yeah, that wisdom of experience is so valuable.
It's invaluable. I mean, a good mentor can help you avoid those common pitfalls that a lot of new traders fall into.
Uh-huh.
They can help you accelerate your learning, and they can just offer encouragement when things are tough.
Right, because it's going to be tough sometimes.
Oh, yeah.
Yeah. So find a mentor, learn from your mistakes, start small, and find your edge.
Yeah,
That's pretty solid advice.
I think so. But it's also important to remember that it's not just about following a set of rules or strategies.
Right.
It's about developing your own unique approach,
Uh-huh.
one that aligns with your personality, your goals, and your risk tolerance.
So the journey of self-discovery.
Yeah. And the book also talks about the importance of staying ahead of the curve.
Staying ahead of the curve.
Yeah.
What does that mean?
Yeah, it's a good question. So it's about more than just staying informed.
Okay.
It's about anticipating change.
Right.
It's about constantly seeking out new information,
Mhm.
new perspectives,
Okay.
and new ways to approach the market.
So it's not enough to just learn the basics.
No.
You've got to constantly be evolving and adapting.
Exactly.
Right,
Right.
yeah.
Because markets are constantly changing.
Right.
What worked before might not work now.
Right, right.
Like adapt or die.
So how do you stay ahead of the curve? What did these unknown market wizards do to kind of keep their edge?
Well, they all really emphasize the importance of, reading widely,
Okay.
attending conferences,
Okay.
networking with other traders.
Right, so being part of a community,
Yeah.
bouncing ideas off each other.
Yeah, and it's not just about gathering information.
Right.
It's about being able to synthesize that information
Okay.
and see patterns that others might miss.
So connecting the dots, seeing the bigger picture,
Exactly.
and anticipating where the market might be headed.
Yeah, and sometimes that means challenging conventional wisdom,
Okay.
being willing to think differently and going against the crowd.
Right.
Yeah.
So stay ahead of the curve, be adaptable, and keep learning.
Yeah.
So it sounds like trading's a lifelong journey of self-improvement.
It is, and it requires, passion, dedication, and a willingness to constantly push yourself beyond your comfort zone.
There's shortcuts.
No shortcuts.
Okay.
It's about hard work, constant learning, and a deep understanding of yourself and the market.
Yeah. All right. So now let's talk about a technique that a few of the traders mentioned, using social media data to gauge market sentiment.
Yes, the power of social media.
Yeah. So they're using platforms like Twitter, Facebook to kind of tap into the collective wisdom of the crowd.
They are, but it's not as simple as just scrolling through your newsfeed,
Right.
It involves using sophisticated tools and techniques to analyze large volumes of data
Okay.
and extract meaningful insights.
So it's like data mining for market sentiment.
Exactly.
Okay. Can you give me an example of how this works in practice?
Yeah, absolutely. So one trader mentioned using social media data to anticipate the impact of the E. coli scare at Chipotle.
Okay.
And what he did was he noticed a really sharp drop in the number of people tweeting about going to Chipotle.
Oh, so like real-time consumer behavior.
Yeah, and that suggested to him that the impact of the scare was actually much bigger than the market was initially pricing in.
Oh, wow. Okay.
So he used that insight to make a really profitable trade.
So he's using social media as like a leading indicator.
Exactly. He was
Yeah.
tapping into a source of information that was off the radar of most other traders,
Right.
giving him a valuable edge.
So social media can be a powerful tool
Yeah,
for traders, but it requires a certain level of skill and sophistication.
it does. It's not just about, reading random tweets.
Right,
It's
yeah.
about using data analytics to extract meaningful signals from the noise.
Okay, so social media data mining, another tool in the trader's arsenal.
Exactly.
What else did these wizards talk about?
Well, they also emphasize the importance of understanding market psychology.
Right, because the market is ultimately driven by human emotions.
It is fear, greed, hope, despair.
Right. And understanding those emotions, knowing how they influence market behavior, can give you a significant edge.
It can. It's about reading the crowd, anticipating the reactions, and positioning yourself accordingly.
Okay, do you have any examples from the book of how traders have kind of used this insight to their advantage?
Yeah, so one trader, Salish Sal, talked about the importance of being what he called an apex predator.
Apex predator.
Waiting patiently for those moments when the market becomes really overwhelmed by fear or greed.
Okay.
And then he strikes decisively, taking advantage of that herd mentality.
So he's like a shark sensing blood in the water.
Exactly, waiting for that opportune moment to capitalize on the emotional frenzy of the market.
Okay, so master your emotions, understand the psychology of the crowd, and be the shark.
Precisely. Now let's shift gears a bit and talk about something that might surprise you.
Okay.
The importance of having a life outside of trading.
Really a life outside of trading. I thought these wizards were like, workaholics glued to their screens 24/7.
Some are, but many of them actually emphasize the importance of having hobbies, spending time with family and friends,
Okay.
pursuing interests outside of the market.
Why is that so important? I mean, trading's a demanding profession, right?
It is, but stepping away from the market can actually, I think, improve your trading.
Really?
Yeah, it helps you maintain perspective. Okay. Trading can be so all-consuming,
Yeah.
and it's easy to lose sight of the bigger picture if it's the only thing you're focused on.
Right. So it's about maintaining a healthy balance, avoiding burnout.
Exactly. And it's not just about mental health.
Okay.
It's also about creativity and innovation.
Uh-huh.
When you step away from the market, you give your mind a chance to rest, recharge, and process information subconsciously.
Right.
You might even find that solutions to trading problems come to you when you're not even thinking about them.
That makes sense. So take breaks, have hobbies, spend time with loved ones.
Exactly.
It's good life advice and good trading advice.
I think so too. Trading is a marathon, not a sprint.
Right.
You need to pace yourself, take care of yourself, and avoid burnout if you want to succeed in the long run.
Okay, so we've covered a lot of ground here, from specific techniques like using social media data
Yeah.
to broad psychological principles like emotional management and the importance of having a life outside of trading.
Yeah, it's been a fascinating glimpse into the minds of these unknown market wizards.
It really has.
And it seems like the one thing that ties all these diverse approaches together is the importance of risk management.
You're right. Risk management has come up again and again throughout our conversation.
It has, and it makes sense because it's the foundation of everything.
Right.
It doesn't matter how brilliant your trading system is or how insightful your analysis.
Uh-huh.
If you don't manage your risk properly, you're eventually going to blow up.
Right. So it's about protecting your capital,
Exactly.
preserving your ability to stay in the game.
Yeah, that's what allows you to be around when those big winning trades come along.
Risk management is king.
It is.
Master it, and you'll be well on your way to success in the markets. Okay, now let's dive into a theme that kept popping up in the book.
Okay.
This concept of unplanned events.
Unplanned events. So we're talking about those unexpected curveballs that the market throws at us from time to time.
Exactly like a sudden geopolitical crisis,
Yeah.
a natural disaster,
Mm.
a surprise earnings announcement that just sends shockwaves through the market.
Yeah, and those events can create both significant volatility and opportunity.
Right, they can send the market into a tailspin or launch it into a new bull run.
Exactly, and it takes a special kind of trader to capitalize on these events.
Right.
Someone who can think on their feet, react quickly, and make decisions under pressure.
And the book talks about Jason Shapiro as being someone who really thrives in these situations.
He does. He's constantly scanning the news, anticipating potential market-moving events.
Okay.
and positioning himself accordingly.
So he's like a chess grandmaster thinking several moves ahead,
Yeah.
always trying to anticipate his opponent's next move.
Yeah.
But it's not just about reacting to the news, is it?
You're right. It's about understanding the underlying forces that are driving these events
Okay.
and anticipating how the market will interpret them.
So it's a combination of news analysis, market psychology, and a good dose of gut instinct.
Exactly. It's a high-risk, high-reward approach that's not for everyone. You can make a lot of money quickly if you get it right, but you can also lose a lot if you miscalculate.
So unplanned events, not for the faint of heart.
Probably not.
They require a certain type of trader who can really handle the pressure and uncertainty.
Absolutely. But they also highlight, I think, an important lesson for all traders.
Okay, what's that?
Be prepared for the unexpected.
Okay.
The market is a dynamic, complex system that can change direction in an instant.
Right.
You need to be adaptable and ready to adjust your strategy as needed.
So don't get too comfortable, too complacent.
No.
Always stay alert and ready to pivot when the market shifts.
Exactly. Now let's focus on a specific type of unplanned event that was mentioned by several traders.
Okay.
Headline scares.
Headline scares, those news events that just trigger a sharp market reaction, often driven by fear and panic.
You got it. And those headlines can create both, panic and opportunity for those who can keep a cool head and see through the hype.
So not getting caught up in the emotional frenzy of the moment.
Exactly. Being able to separate the signal from the noise.
Okay.
One trader shared a really fascinating story about a false headline that was accidentally published by the Financial Times.
Oh, no.
The headline stated that the European Central Bank was holding interest rates steady when, in fact, they were cutting rates.
Wow, a completely false headline from a reputable source.
Yeah.
I bet the market went crazy.
It did. The euro sold off sharply,
Right.
as did European bond prices.
Wow.
But this astute trader that we're talking about recognized that the headline didn't make sense.
Oh, okay.
The ECB had been signaling a rate cut for weeks, so there was no logical reason for them to suddenly change course.
Right, so he saw through the headline, recognized the market's overreaction, and took advantage.
Exactly. He bought euros and European bonds as the market panicked,
Oh, wow.
making a significant profit as prices rebounded once the mistake was corrected.
That's a great example of how staying calm and thinking critically can pay off in a big way.
It is, and it highlights, I think, the importance of understanding market fundamentals and not just blindly reacting to headlines.
Right.
Sometimes what seems like a major market-moving event is just a temporary blip,
Right.
fleeting moment of irrationality.
So headline scares, potential gold mines for savvy traders,
Yeah,
but minefields for the unprepared.
exactly. Now let's shift gears again and talk about something a little more technical.
Okay.
This concept of information arbitrage.
Information arbitrage. That sounds intriguing.
Yeah, so it's a strategy that involves exploiting information gaps in the market,
Okay.
where one group of investors has information that another group doesn't.
So identifying those information asymmetries
Yeah.
and trading on them before they disappear.
Exactly. And one trader in the book actually talked about using a technique called screen scraping to get a head start on market-moving news.
Screen scraping. That sounds like something out of a spy movie.
It does, doesn't it?
Yeah.
It involves using software to automatically extract data from websites. And in this case, the trader was using it to get information from company filings before it was released to the public.
So he was getting a sneak peek at the news.
Essentially, yes, he was able to get like a few minutes head start
Wow.
on the news wires, which allowed him to capitalize on market-moving announcements
Oh, wow.
before other traders had even seen them.
That's incredible. It's like being a high-tech information ninja.
Exactly,
yeah.
but it's not just about having access to information.
Right.
It's about being able to process it, quickly assess its significance,
Okay.
and make a decision before the opportunity disappears.
So a combination of technology, analytical skills, and lightning-fast reflexes.
Precisely. And it highlights, I think, a really key principle of trading.
What's that?
The faster you can process information and make decisions, the greater your edge.
Okay, so information arbitrage, another high-skill, high-reward approach.
It is for those who can master it. Now let's shift our focus to a more nuanced aspect of market dynamics.
Okay.
This concept of information dissemination.
Information dissemination, that sounds important.
Yeah, it is. It's about understanding how news and information spread through the market and influence prices along the way.
Okay, so why is this important for traders to understand?
It helps you understand how the market reacts to news.
Okay.
Some information is immediately priced in,
Mm-hmm.
while other information takes time to be fully absorbed by the market.
Right. So being aware of the time lag
Yeah,
between news and market reaction.
exactly. And it's not just about speed. It's also about understanding how different types of information spread through the market.
Right.
Some information is widely disseminated
Uh-huh.
through news outlets and social media,
Right.
reaching a large audience very quickly,
Okay.
while other information might be more localized,
Uh-huh.
only reaching a smaller group of investors.
So you need to be aware of where information is coming from, how it's spreading, and how likely it is to impact the market.
Exactly. One trader actually talked about using social media data to gauge consumer sentiment. And he noticed that changes in consumer behavior, as reflected in social media conversations, often preceded changes in stock prices.
Oh, wow. So he was using social media as like a leading indicator.
Exactly. He was tapping into a source of information that was off the radar of most other traders,
Right.
giving him a really valuable edge.
That's a great example of how understanding information dissemination can give you an advantage in the market.
Yeah.
It's not just about knowing the news. It's about understanding the context, the source,
Yeah.
and how likely it is to influence market behavior.
Exactly. Now let's move on to another fascinating aspect of market behavior,
Okay.
this concept of price distributions after events.
Price distributions after events. Tell me more about this. What's that mean?
So it's about understanding how prices tend to move following certain types of market-moving events,
Okay.
whether it's a major economic announcement, a surprise earnings release, or a geopolitical crisis. These events often trigger significant price fluctuations.
Right. So by studying these price distributions, can traders gain insights into how the market might react to similar events in the future?
Exactly. By analyzing historical data, traders can identify patterns in how prices have typically reacted to specific types of events in the past.
Also, it's like looking for rhymes in market history.
I love that analogy.
Yeah, those echoes of past behavior that might give you clues about what to expect in the future.
Exactly. And it's not about predicting the exact price move.
Okay.
It's about understanding the probabilities
Uh-huh.
and managing risk accordingly.
Right. So you're not trying to predict the future. You're just trying to understand the possibilities
Exactly.
and manage your risk.
Exactly. One trader actually mentioned that he uses this approach to determine his position sizing and his risk parameters.
Okay.
So if he anticipates a wide range of potential price movements following an event, he'll take a smaller position to limit his downside risk.
Okay. That makes sense.
But if he expects a more contained reaction, he might be more aggressive with his position sizing.
So understanding the historical patterns of price behavior can be a valuable tool
It can.
for managing risk and improving your overall trading performance.
It is. It's about using historical data to inform your decision-making and make more calculated bets.
Okay, so price distributions after events, another tool for traders looking to gain an edge. It's fascinating how these unknown market wizards combine so many different approaches.
It is.
Technical analysis, fundamental analysis, psychology, and even a bit of data science
Yeah.
to achieve success.
It is remarkable, isn't it? They're
Ah.
constantly seeking knowledge, refining their skills, and adapting to the ever-changing market landscape.
It's truly inspiring.
It is. It
Yeah.
really demonstrates that, success in the market isn't about following a rigid set of rules.
Right.
It's about continuously learning and adapting your approach to fit your own unique strengths
Right.
and the ever-changing market conditions.
So we've talked about risk management, the role of narratives exploiting information gaps. What other insights can we glean from these unknown market wizards?
Well, one thing that several of them emphasized was the importance of meticulous record keeping.
Record keeping. So like keeping detailed logs of every trade.
It's more than just tracking the numbers. They talked about documenting the thinking behind each trade,
Okay.
the rationale, their emotional state at the time, any other relevant details that could provide insights into their decision-making process.
So understanding the why behind your trades, not just the what.
Exactly. And by analyzing your trading records, you can identify patterns in your behavior,
Okay.
both positive and negative.
Right.
You can see what's working, what's not, and where you need to improve.
So it's like having a personal trading coach in your back pocket,
Yeah,
constantly providing feedback and helping you refine your game.
precisely. One trader actually mentioned that he regularly reviews his trading logs looking for recurring mistakes or biases
Okay.
that might be sabotaging his performance.
So being brutally honest with yourself,
Yeah.
recognizing your weaknesses,
Yeah.
and actively working to overcome them. But it's not just about identifying mistakes, is it?
No, it's also about recognizing your strengths,
Okay.
those trading patterns that consistently lead to profits.
Right.
So by analyzing your records, you can identify what you're doing well
Okay.
and double down on those strategies.
So record keeping helps you turn your trading experience into a continuous learning process,
Exactly.
defining your strengths and eliminating your weaknesses.
Precisely. It might not be the most glamorous aspect of trading,
Right.
but it's a crucial one for anyone serious about improving their performance.
Record keeping check. As we wrap up our deep dive, is there one final piece of wisdom you'd like to share from these unknown market wizards?
I think the most important takeaway is this. Don't be afraid to be different.
Don't be afraid to be different. What does that mean in the world of trading?
It means don't blindly follow the crowd.
Okay.
Don't get caught up in the latest fads or trends. Develop your own unique approach to the market, one that aligns with your personality, your strengths, and your risk tolerance.
So be an independent thinker, chart your own course,
Exactly.
even if it goes against conventional wisdom.
These unknown market wizards achieved success precisely because they were willing to think outside the box,
Okay.
to challenge the status quo and find their own unique path to profitability.
So to everyone listening, don't be afraid to be a contrarian, to go against the grain, to forge your own destiny in the markets.
Yeah.
Embrace your individuality, trust your instincts, and never stop learning.
Well said. I think that's a perfect note to end on.
It really is. And to our listeners, thanks for joining us on this deep dive into the world of unknown market wizards. We hope you found it insightful, inspiring, maybe even a little bit challenging. Keep exploring, keep learning, and keep pushing yourself to become a better trader
Yeah.
and a better version of yourself.
And remember, the journey is just as important as the destination.
That's a great reminder. Thanks for joining us.